Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Closed-end funds are similar to ETFs, but with one structural difference. Joining us to discuss is Sarah Mehle. She is the ESG index strategist with Nasdaq Global Indexes. Sarah, it's great to see you again. Welcome back to Trade Talks. Almost forgot where I worked there for a moment, but let's talk about that. The one structural difference between CEFs or closed-end funds and ETFs.
Sure. So, like you said, there are many differences to exchange-traded funds, but the one difference is that they're going to offer a fixed amount of shares. So that can result in closed-end funds trading at a premium or a discount to net asset value. So when you buy closed-end funds at a discount, that offers the potential for appreciation. And investors can look to use closed-end funds for income generation. They are typically going to offer a higher yield. But they also require a little more research, a little more, digging to be done just to find out what's appropriate and what's out there. And they can be a little more complicated and a little more volatile. So as a result, definitely going to have to provide some research there, which is where a rules-based index, such as the ISE High Yield Income Index, comes into play here.
And if we take a look at your next chart here, let's get some of those index stats for ticker YLDA.
Yeah, so currently the ISE High Yield Income Index yields a little over 8%. It is the average closed-end fund within this index, of which there are about 45 trades around a 6% discount. So again, there's that potential for appreciation there to reward investors along with that dividend yield. And right now we're seeing about an 80-20 split there between fixed income and equity. So a little bit of fixed equity exposure through closed-end funds, as well as some debt exposure as well.
And let's talk about the index performance relative to AGG Ag.
Yep. So again, this particular index, the ISE High Yield Income Index, or High Income Index, consists of those 45 closed-end funds. So when we compare that basket of closed-end funds to a fixed income benchmark, such as the AGG, going back 5 years, we've seen the income index almost double those returns. So we can see that it has not been a smooth ride whatsoever, because these closed-end funds they have the ability to use leverage. So when things are bad, things can be really bad. But when things are good, that can be amplified to the upside as well. So, the leverage and then the yield definitely plays a part there in that volatility. But we've seen some strong outperformance, especially since the March 2020 bottom. We see the ISE High Income Index up about 71%, while the Ag is actually down 2%. So we have seen the High Income Index fall a little bit off of those recent highs. This could be a potential opportunity there. But overall, there's greater reward potential here, which the higher risk translates into higher reward, which is what we've seen here in the long term with the ISE High Income Index.
All right, Sarah, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.